Hi everyone. So it is Monday the 29th of March. Where is this year going? And I'm just having a look at the I'm just having a look at the currency markets and having a look at the dollar index starting off here, having a look at it on the monthly. So one of the things that I spoke about is, although it is technically in a downtrend, it's putting back into the moving averages. So if it is going to turn around, that is a good area for it to be doing that. And I think I actually drew these in almost over a month ago. Anyway, so looking for a potential bearish candle, which would put it in at April. So April would potentially be a bearish rejection candle, maybe off that 95 level. Then potentially looking to see over April, May, and June, looking to see the dollar index weaken. However, again, just to recap, we are still largely within a range. And therefore, actually, the possibility of the dollar strengthening, breaking through 95, heading up towards 99 and 100 is certainly a very real possibility. So based off the kind of size of the most recent candle and where it is in relation to the most recent highs, I'm kind of leaning a little bit more that way, but I did mark these arrows in this area for a reason. This is a really good area for price to turn around. Of course, in the long run, I'd love to see price break out of this, but it's not impossible that we could see the dollar index in this range for years to come. Okay, it's still in the range. It hasn't broken out, and it could be in here for another 4 or 5 years if that is the case. So the only way we'll know is ultimately when it does break out to the upside or break out to the downside in some way and then start moving. So this is what I'm looking for. So in the immediate future, it makes more sense for me to see price either consolidate where it is now for the period of April. And if it breaks above 95, I think it's fair, relatively rational to conclude at that point that it's going to hit higher. Okay, so that really tells me that if it does ultimately go above 95, it's almost certainly then going to head up towards 100 probably. And if it doesn't, if we do end up with a bearish candle, then it becomes a 50-50 which way it's going to go, because is the market going to follow through, head down, or is it ultimately going to reject that and head higher? So I think we'll really know a lot more by May, or May or June. But for now, so just try to keep those options on the table, because what does that really mean ultimately for that? So almost immediately right now, I do anticipate I can see the momentum indicators are still looking relatively nice and bullish. RSI, not as much. So price is going to deal with 93 this week. It's going to make a decision about that. That's a weekly level in red. So it's going to make a decision about that, and we'll see. So if we move across the euro dollar makes to me more sense for it to continue to head down to 1.16 at this point. You can see we do have an uptrend in the monthly, and that actual retracement is a very deep retracement. That's closer towards a 786. I'm doing this by eye, by the way. So deep retracement like that does not really kind of scream that euro dollar is super strong and is therefore looking to turn around. I'd have to see this ultimately close as a strong rejection candle to buy into that, or have it stay where it is. But I think basically where it is now is already an indication it's a deeper retracement than should normally happen in a strong trend. We'll see how that goes, but I think at this point, I think it's starting to lean towards the idea that it's going to head down, possibly down to 1.16, which then adds to the weighting that we're going to see a stronger US dollar over the coming months. We'll see how that goes. So what are we looking for this week is shorting opportunities on euro dollar to the downside with a weaker euro, stronger US dollar. You can even see here, actually, and this is interesting because sterling is a little bit different. That weekly chart is looking particularly bullish. 1.4 is definitely a level of resistance. So I think that if sterling can get back over 1.4, it's almost certainly going to head up towards 1.4350. So there's some potential there for moves to the upside. Also at the same time, looking at the monthly here, pullback to 1.35 is also a very valid kind of retracement, and then it could continue to the upside. So what this does tell me is that the euro, which is the biggest currency against the US dollar, is the US dollar and the euro basically playing games here together with each other, and the euro can move the US dollar. But standing aside and looking at sterling itself actually looks a little bit more bullish than bearish. So although we technically have a downtrend in the daily, we're coming up against resistance. I'm anticipating it's actually going to attempt to hit higher. So therefore, a shorting opportunity now doesn't really make sense. You've got an uptrend on the monthly, uptrend on the weekly, downtrend on the daily, and the retracement. All of this indicates that there is that possibility that it's going to climb higher, which is interesting because, of course, the dollar is looking quite strong. So you would think maybe what will happen is the dollar will come in here and push sterling back down. That's a possibility. But this price action here is particularly bullish. So sterling has a separate story to euro dollar. Sterling looks like it wants to climb higher. Euro dollar looks like it wants to hit a little bit lower. Looking at Aussie dollar, so I just noting we definitely have some support in this area. So I'm going to mark that with as a bit of a range. Let's just do this. There we go. And so that is almost certainly that range of support. And we could actually find subsequently that also continues. Look at the monthly here. You can see that battling to get through that 77.50 level. Battling to get through it. If it does break through it, it's got 81, a little bit higher up. And so, but it is battling to get through that. So it's actually very unpredictable. It's ranging on the daily. It's ranging certainly on the weekly. So I think I'm leaning towards it's actually produced a lower high, lower low, but it hasn't broken outside of this range. I'm leaning towards it's potentially hitting a little bit lower. So it's interesting. Of the three so far, GBP looks a little bit better a little bit stronger than the other pairs. Here we can see, Kiwi dollar has done a retracement almost back down to 0.69. That actually makes sense. It was due for that nice little rejection candle here, but so far that behavior looks a little bit more, looks like a normal retracement rather than a change in trend. Just looks like a normal correction back down towards 6.9, and then potentially going to continue back up from that. So what I'll be looking for here is potentially to see how the market heads down towards 6.9 if it does, and then if it from that point onwards starts to climb. Again, they're kind of supporting potentially a weaker Kiwi dollar initially, for now, at any rate. Looking at dollar yen. So dollar yen kind of does its own thing. Okay, this is something that I've spoken about for the last 6 months. Dollar yen is largely within a range. I was looking to see it break out of that range. It did, and then it kind of dipped its toe in the water. You can see it kind of bounced off these levels here, which I haven't really marked as anything significant. And then it's kind of managed to climb its way up quite aggressively. So look at these three candles compared to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. There's a lot. All of these candles within this range, and this is what it's managed to just kind of wipe out. So what it does tell me is that dollar yen is happier moving to the upside at this point in time. And so I just need to kind of take that account. It's happier moving to the upside at this point in time, up towards 1170. That makes the most sense. And if you're kind of thinking that, well, this is the way I approach it. I have noticed going back to about 2016 that dollar yen does its own thing entirely. So in other words, while many of the other pairs will fall in line, the only time the dollar yen falls in line with the other majors is really when it suits its own kind of agenda. Dollar yen will do its own thing. And actually, I don't even think that's necessarily unique to me. I think Nick McDonald, my sort of mentor, has observed the same thing. Dollar yen has its own agenda and it does its own thing. So it's very important to keep that in mind. Obviously, when trading dollar yen, that what you're doing is trading what dollar yen is telling you, as opposed to what kind of in the way that I do it now, where I look at the dollar and then I look at the majors, make a decision off that dollar yen I treat independently. Okay. So right now, dollar yen actually shows a lot of inclination to the upside. So I'm just going to leave it at that. Certainly 111.70 looks like it's going to strengthen. Dollar Swissy, and of course, we're also seeing that strengthening because of the stronger dollar. So yes, so this week I want to watch see if dollar Swissy breaks above 94, which is a key level. If it breaks above that and holds above that, the next level up is 1, which is parity, by the way, between the US dollar and the Swiss franc. So also worth noting there, and then finishing off with dollar CAD. Dollar CAD also potentially range bound. So what I'll be looking for this week, we've had certainly dollar CAD, believe it or not, which has not always been very appealing in terms of trading opportunities. Dollar CAD has actually been producing some really better than dollar Swissy, better than dollar yen has been producing some shorting opportunities. And so it may continue to do that. However, at this point, it makes more sense for me, especially if the dollar is going to strengthen, makes more sense for me to see dollar CAD climb up towards 1.3. Okay, so this week I anticipate there'll be a change in trend. Break these previous highs would be a confirmation. If we break the high of 1.2749, call it 27.50, then I would say that's confirmation that we're going to head back up to 129.51. So what did I say that was? Breaking the high of 127.50, and then we'll see the high of 129.51. So there we go. So kind of in summary, looking back at this, in particular, I like the idea. I want to have a look at GBP pairs. So GBP pairs to me would make sense that they would be particularly bullish. So let's have a look. Pound yen is looking bullish. Pound Swissy is looking bullish. Pound CAD, not as much. Very messy within a range, but it's at the top end of the range. Pound Aussie, let's have a look at that. Pound Aussie looking more bullish than bearish. Pound Kiwi definitely looking more bullish than bearish. So in terms of other crosses, the GBP is looking nice and strong. Dollar yen will do its own thing. Euro dollar is looking weak. So in looking, taking the US dollar into account, it does appear as though there is a strong probability, greater than 50%, that the US dollar is going to continue to strengthen at this point. As I said, I'll be watching it at 93. If it is going to turn around now, it'll do it between 93 and 92 over the next couple of weeks, which will end up the monthly candle as well with March and April. But at this point, I'm actually leaning towards the expectation that we're going to see this break above 95, which means we're still within the range. We're not really out of the range until we break outside these highs or below these lows. And actually at that point, the only thing ranges do, which is a bit frustrating, is they can ping pong between the central axis, which is 95, and above and below. But actually, I think if we break above 95, we're going to see it head towards 99. So I'm looking towards seeing a stronger US dollar. And there was a period, absolutely. There was a period here where I was looking to see a weaker US dollar. I thought we were going to break out of it, but we haven't. We've retraced sufficiently back into the range that there's a possibility we're just still stuck within the range, which is a bit frustrating because I don't think we're going to get a lot of great trends while it is still stuck within range. There we go. So the ones that appeal to me the most will be GBP. I'll be watching some of the other majors just to see what they're going to do in relation to the US dollar. But I'm expecting in the nearer future, or at least over the next 10 days, I'm expecting that dollar to strengthen and certainly test 93. If it breaks above 93 by this time next week, that'll be certainly start to indicate that it was head up towards 95, which means there'll be shorting opportunities on the other major pairs. The Euro, GBP, Aussie, and Kiwi potentially, maybe not so much with GBP. That's it. Thank you very much. I hope you found this useful and instructive, and have a great